Well, what's your view on some of the activity we're seeing on the Nigerian markets right now, but more specifically, what are you forecasting for the trading day ahead?
Thank you. What we're seeing is that a lot of the food and beverage sector especially is showing some good figures. We had in the last week or two PZ, UAC, Unilever and Dangote Flour and Sugar both coming out with quite strong growth figures and rises in PBT, which shows that the food and beverage sector, despite the slowdown in the economy, seems to be showing good results. I think going forward we will continue to see that. What we'll probably see in the next 2 or 3 years really is that the credit crunch and the lack of lending in the banking market will probably affect their investment decisions for the next one or 2 years. So it doesn't have a direct effect on their figures at the moment because they don't need those bank loans for working capital. They are quite strong on that front. But investment decisions have had to be delayed, I'm sure, because of the slowdown in the credit in the sector.
Kayode, let's put the spotlight on the oil space. I mean, we've heard the presidency and the House of Representatives both having struck a deal on royalty for oil communities. Now, this has been a source of controversy for quite a while. Any clarity as to what this might spell for oil companies that are prospecting in the region?
On the face of it, it's a good idea. What we're hearing is that they're looking to vest 10% of equity in the JVs they have with some of the major oil companies in the host communities. And on the face of it, it is a very good plan. It gives ownership to the communities and should help dampen community agitation for more say and more resource control. The problem is actually in the detail. Which of these communities are they going to lead to increased intra-community strife as different communities fight to be the ones who are allocated at 10%, because it is going to be quite a lot of money. And what we might see, if it's not handled properly, is that instead of the communities versus the oil companies, you might see more intra-community agitation as communities jostle among each other to try and make sure they're the ones who are getting that 10%.
Yeah, well, the devil, as you say, is in the detail, and we've got the petroleum industry bill that's presently before the National Assembly seeking oil companies to pay royalties at their own discretion at this stage. So do you see that actually being amended so that oil communities have to be granted royalties and penalty fees moving forward?
I think that's one of the amendments the government and various social advocacy groups are looking for in the PIB, and we will see some form of that in the final bill, I believe.
Let's get into a few of the specific counters here. I mean, Shell seems to be yielding quite positive results. We've got operating costs reduced by $1 billion in the first 9 months. But to bear in mind is that they've also cut 5,000 jobs in the process. So how are you viewing the investment merit in Shell?
Shell is always going to be a good investment, and specifically they're onshore. They still have about 800,000 barrels shut in on the onshore sector. 115,000 of that has been released with the reopening of the EA field, which is ramping up production after starting on November 8th, after being shut down in September and initially shut down in 2006 due to attacks from militants. So they're slowly getting those onshore fields back on the stream. The problem is that for a lot of these companies, including Shell, is that they are loath to invest in repairing their onshore facilities until they're sure that the amnesty that's actually started is going to be sustainable, because they don't want to invest in repairing those fields if they're just going to be blown up again in the next few months.
Of course, Kayode, it's the uncertainty of the amnesty deals that's one challenge. The other is Chinese investments that are possibly going to be made where these companies currently operate as well, effectively spelling a takeover of these Western oil companies' prospecting rights. Have we heard any new developments in that regard?
No, we haven't. To be honest with you, a lot of analysts believe that it's almost a red herring by this Chinese investment. Reason why is that a lot of the JV contracts, the OMLs, are actually up for renewal this month. A lot of them were expired last year, and they had a 1-year extension, and they're up for renewal this month. And there's just between the government and the oil majors, because